What's up? So it's now Sunday, 21st of June. Oh. All three companies. Put them in this bag. Undertaken stock. We got actually, will that be a surprise? Ooh, CenturyLink. Oh, it's not even showing the color. I could see the colors in it, but CenturyLink. Fun. CenturyLink. We have CenturyLink. Welcome to my not fake, definitely not fake. Office. That's just me moving my swivel chair. Yep. All those pixels moving around? It's the future. So we're going to be looking at CenturyLink, global tech company. They're headquartered in Monroe, Louisiana. Looks like they offer communications, network, cloud. They're an S&P 500 company as well as a Fortune 500. Looks like they do data integration, cloud hosting, VoIP, which is voice over internet protocol, IT, etc. They're in North America, Latin America, Europe, Asia Pacific. Their symbol is CTL. So essentially they're a telecom company, founded in 1930. They bring in over 20 billion of rev per year. And again, Wikipedia doesn't always necessarily have the most up-to-date financial data, but this is showing losses in income, at least in 2018. Assets were down. This is showing 45,000 employees. And then these are some of their subsidiaries. Here's all the states that they're available in. Looks like, was it 4 times 2, 3, 4, 5, 6, 7, 8, 9, 37 states, which is the majority of the country. Here's their executives and board members. Check out Jeff's story. (1960), so he's 60 years old. Decent age for a CEO. Oh, looks like they acquired Level 3 back in 2017, where he became the president and CEO. And then just over 2 years ago, he became the CEO of CenturyLink. Went to Northwestern, bachelor's engineering, math, and physics. SMU, where he got a master's in telecom. Then he worked at Southwestern Bell, which is now owned by AT&T. So a decent, reputable, and accomplished CEO. Some of their acquisitions, they got Embark in 08 for $6 billion. Some of their venues and sponsorships. Wow, some big names. Boise, Boston, Seattle CenturyLink Field, which is where the Seahawks play. Denver Broncos, Magic. Wow, some big names. This is a fairly big company to get, because these are not cheap contracts to get, especially for NFL and NBA. Yep. So now I'm just chilling at the outside CenturyLink Field in Seattle, Washington. As you can see, it's definitely real, and I'm definitely here. So CenturyLink, CTL, Century, Triceratops, Limeade. Selling for $10.15 a share. We're on Yahoo site to do stock research. You can see here's a daily chart. It looks like it was slightly down on the day. 5 day. Actually, let's zoom out full screen. Fun charting. See, here's a 5 day. You can see open the week, mid 10s, peaked, and dropped to here. Huge drop, high volume, which typically happens on huge drops. I mean, not a huge drop, but percentage-wise for the day traders and swing traders, it's a decent return right there. They're shorting it. Regardless, then down on that 17th Tuesday, I guess. Here you're trying to flat, so overall down slightly on the week, about a month. Started at about 10, peaked at 11.5. Wait, is that 12? 11.5, and went back down. Pretty much just trading with the markets, following it. Almost probably has a similar beta, I would think. Was in 15s back in January, and a yearly chart as well, 15, so that was about its peak, at least on a 1-year chart. Back in 2018, it was in as high as the 23s. Michael Jordan.
Yeah, he's a friend of mine, you know.
And then on a 5-year chart, wow, upper 20s, low 30s. And it looks like they're paying dividends too. Every quarter. Looks like, so that's respectable. Even though the share price is dropping a ton, they're still paying dividends. And then on a max chart, so this goes back to 2010, which this looks like when they probably IPO'd, or at least that's how far back as Yahoo shows the data. September 2010, 36. That'd have been a fun IPO to play. Decade ago, September. It went to mid 40s, dropped. Wow, this is a fun swing trade. This could be a really nice price target to get in, actually. Before I do all my research, before I do the research, etc. Back to the non-charting. So yeah, at 10:30. So yeah, as I said, slightly down on the day. Probably gonna be down, at least based on the bid ask on Monday morning. Volume was high above almost double average. I would assume that's a 30-day or 3-month average volume. So volumes is way up, especially from retail traders. Market cap 11 billion. Beta, yep, just almost exactly even with the market. Earnings per share highly respectable, 1.13. That's solid. Trailing 12 months for a $10 stock at least. So they report earnings in a month and a half, and then this says the dividend is 9.8%, but don't always base dividend numbers on what they say, because especially with this volatile times and the COVID, etc., they may have lowered it, or they may not have, but don't rely on the dividend numbers, especially in volatile times like this. Ex-dividend just passed last month. Target estimate is, I don't know who this is from, it's probably an average, I would think. Here's some other similar companies, also telecoms. Comcast, huge one, they're $39. That's a conglomerate. Any news? Latin America, looks like they're trying to get, wow, 800-kilometer fiber optic. That's a big investment. I wonder if there's a cost to that now. 9.9 dividend yield safe. They can outlast the COVID. Stats. Stats. So their market cap down from this quarterly 13 to 13, 14. Yeah. Profit margins, they're still making money. Nice profit margin, but typically telecom and internet companies have high profit margins. Just take a look at Apple or Facebook, etc. Return on assets is positive. Revenue, solid. Revenue growth, so they lost year over year. Only 4%, which I'm sure that they have their valid reasons. Cash, almost to 1.5 billion. Book value, really good. I like this number right here compared to their share price of 10. Their book value is more than the share price, so they can pay off all their debts and still have cash left over. A lot of debt though. They essentially pay off all their debt, but still have the cash from the debt to pay off their assets. Operating cash flow, solid 6.8. So revenue growth is earnings growth, no answer, so that typically means that their net income was down. Maybe the finances, actually there's directors that we already saw, 42,000 employees. Here's annual, 17.46, 2 years ago 17.6, 23, and then as we saw the revenue dropped by about $1 billion, almost $1 billion. Gross profit less than $1 billion. Net income, wow, they're taking some losses. Jeez, $5 billion loss last year. Quarterly revenue. First quarter this year, 5.2 billion, which was down from. Geez, they haven't made less than 5.2 billion since over a year ago. Net income. Oh, they're profitable here. That's weird. Oh, they took a huge loss here. They must have. Kind of want to research why they took such a huge loss right here. That's why they're down, because it's one quarter. They must have bought someone or took on a huge amount of debt. Assets, liabilities, assets, 64. Current asset, 4 billion. You can see all the numbers. Cash flow. Yep. Just over 10 analysts. what the analysts are saying. Here's our recommendations. Looks like majority are buy and hold. No sells. That's funny. Whoever had a sell rating, it was 2 months when they dropped. Changed their mind. Price targets. Wow, some of the price targets as low as $7. That's almost 40% drop, and then almost $14. By the way, these are 1 year out price targets. Any recents? A month ago, equal weight, hold, overweight from Wells Fargo, SunTrust. Oh, they just maintain, right? Yeah, maintain a hold. Goldman Sachs downgraded them to a sell back in April 1st. Huh. Can we go back to April 1st? I'm kind of curious. Wow. Who did that? Wonder if they downgraded them to sell just so that they could buy it. But that's how the world works, because this is literally like almost the absolute cheapest price that they were at. $8.79? Was there a cheaper price? At least not as far back as, what's this, a year chart? April 1st, wow. They dropped as low as $8.51, and don't even look like they dropped below that ever. Huh, interesting. Good job, Goldman Sachs. Way to downgrade to a sell at its absolute lowest price. At least in the past year, maybe ever. Interesting. So now we're on FinViz. Great site to research. Beautiful chart. You can see the simple moving averages. Weekly. Can I do this? No. High volumes on the drops, of course, except this was a slow drop, so the volume didn't drop till these consecutive red days. Yep. 0.7% insider ownership. Return on assets 2%, equity 9%, investment down 7%. So again, they're S&P 500. This shows 42,500, which is I think down from Wikipedia showed 45,000, right? Yeah. So seems like it's not up to date on Wiki. Yeah, you can option it, you can short it. But yep, we saw it. Hold recommendation. Positive profit margin. I still want to find out why they're down in 2019 Q4. Here's the analyst recommendations. What? In the first quarter of the year, huh? Down, 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 down. Went up at Guggenheim. Seldom neutral. Huge. There's a level when a company projects a price drop that they never even go to. Good job, Citigroup and Goldman. News. Is some insider transaction. Yep. So one sale for 43K. Buys in March 12-13 for about 100K, 200K on these two. All different people, directors, EVP, CFO. Yep. Let's see. Check out tip ranks. I say a downside. Yep, the hold rating that we already saw. More ratings. Down, re-hit at a hold for 14. These ratings are higher though, but they're long 4 months out. So before COVID peaked. Alright, stock analysis. Neutral. Okay. Bloggers' opinions, don't listen to them. Hedge funds are decreasing. Listen to them. Neutral. Solid. Here's some other competitor, or not competitors, but stuff that people also bought CenturyLink so they could trade correlative with each other. I'm sure there's trend lines that you could trace these companies based on the trading of CTL, not directly, but indirectly in somewhat similar ways. Lots of lots of buys in the last month. Wow, because this shows buys and sells. Haven't seen a sell since 4 months ago. Very enticing. Uninformative, but he has 0 stars. Actually, 0.2. Wow, he was a CEO too. That was point. Alright. Hedge funds, as we saw, were decreasing out. Decreased by 5.2 million shares, which is just over $50 million, which is pennies to hedge funds. Let's see what the highly rated fund managers are doing. Increased by 100%. Wow. It's only 0.13%. This dude reduced. Auxiliary asset management. Okay. E-news. Yeah, we saw they're building a however many kilometer line in Latin America, Colombia to wherever. 11%. Maybe that's because Goldman downgraded them. Not saying anything though. 22 cents. Oh, wow. And we'll just check out their social media, because why not? Twitter. 36,000 followers. So good. They have a media team. Good job, Jeff Story. Okay. I looked at future of gaming. Watch out for gaming. They're going to be taking over sports. Professional live TV sports. Yep, we already know they're in the cloud. They're actually getting a decent interaction counts compared to other companies that just have no social media presence. Even to get a few comments, retweets, hearts. Some companies don't get anything. I know they've been around since 1930, but still, even some of the oldest companies don't get that sort of attention or care. So, as you can see, I'm now in the CenturyLink field. It's a packed stadium. And we're now at the decision point where will CenturyLink go? We saw their numbers, their stats, their news, analyst ratings, transactions, their finances. You are under the radar, CenturyLink. Where will you go? So, overall, they bring in solid revenue, net income, almost every quarter except for that one interesting quarter back in Q4 of last year, or 2019, yeah. Whichever year it was where they had a $6 million loss. Not sure if it was a buyout or what. But we see they're trying to expand, especially in Latin America, which is developing region, who's getting more and more market share, especially internet. Their internet speed is only increasing in those other nations, in Latin America and Europe, etc. While the United States isn't growing as fast as we'd like to be, and internet speed wise. But regardless, it's a great industry to be in. They've been around for almost a century. CenturyLink. But yeah, a lot of competition, very expensive industry to be in, to run, which means they just tack the price on to their customers. But regardless, I think they're well positioned. Competition is tight, but they're in, as we saw, 47 U.S. states, vast majority of the country. More and more people are shifting from television to internet and streaming, etc., which means more business for them and all the other telecoms. We saw they're in cloud. They're very well positioned in the markets, and I've owned them in the past. Very fun company to trade, but overall I'll give them a rating. C. So the reason I give them a C and not a B is because despite their high revenue, net income, decent number of employees, dropped from what Wikipedia showed 2 years ago, management's there, I wouldn't hold them long term or forever, so I wouldn't put them in a safe, hold them forever. Although they do pay dividends, so I put them here, but they have a suspiciously cheap price, especially compared to their higher tier competitors, and they're paying a high dividend, so I'm not sure if they have to pay that high of a dividend. It's almost as if they're doing that just to keep their shareholders, but I'm not a board member, so I'm not making decisions there. But regardless, I see them staying around for mid to short term, obviously short term and definitely mid term, but I'm not sure if they'll be around forever or long term. They could even get bought out because they have significant share in, I'm sure, lots of southern states, it look like, and with internet user growth every single quarter, and more obviously with COVID, more people staying at home, could be a great opportunity for them if they seek it. But overall, I'd say definitely do your research before buying them. They're a great company, but I wouldn't hold them long term. As you could see, hedge funds were selling them overall in the past quarter. Still people buying them, but I like them mainly for their industry, the time they've been around, dividend. Questionable share price. It's like struggling to go up for some reason past few years. So there's gotta be a reason for that. Yeah.